The petrodollar, the hidden system running the world. Did you know that there is a global system silently governing almost every aspect of our lives? It controls everything from the prices of goods in your local store to the cost of energy and the policy directions of leading world powers. Contrary to popular belief, we aren't talking about a classic banking elite or stock market fluctuations. This is the petrodollar system. For over half a century, this mechanism has served as the foundation of the modern world order and defined the rules of the global economy. To understand the essence of the petrodollar, one must first grasp the colossal significance of oil. We are used to perceiving it simply as fuel, but its role is deeper. Oil is the energy that drives cars, planes, and giant cargo ships, ensuring the seamless logistics of people and goods across continents. However, fuel is just the tip of the iceberg. Oil is the primary raw material for the production of plastic, without which modern medicine, electronics, and daily life are unthinkable in many countries. Oil remains the key resource for electricity generation. It serves as the basis for chemicals, synthetic fabrics, construction materials, and highly efficient fertilizers that allow the world's multi-billion population to be fed. The modern economic model literally stands on oil. This creates a massive global market where countries are in a state of perpetual exchange. Some nations, like Saudi Arabia, possess surplus resources, while others, like Japan, have high technological development but almost no domestic raw materials. This imbalance creates the need for a universal exchange tool, a currency recognized by everyone. The US dollar's dominance was no accident. To understand the process, we must travel back to the end of World War II. While most of Europe and Asia lay in ruins, the industry and financial system of the United States remained virtually unscathed. This allowed the US to become the world's primary creditor and producer. In 1944, at the Bretton Woods Conference, representatives from 44 countries agreed on a new financial architecture. The US dollar was officially designated as the center of this system. It became the only currency directly pegged to gold at a rate of $35 per ounce, while other national currencies were pegged to the dollar itself. This effectively made the dollar a gold substitute in international settlements. The system worked for decades, until the 1960s, when the US spending on social programs and the Vietnam War led to excessive money printing. Other countries began to doubt whether the US had enough gold to back all the paper notes in circulation. In 1971, President Richard Nixon made a radical decision. He temporarily, and as it turned out, permanently, suspended the convertibility of the dollar into gold. This event went into history as the Nixon shock. The world moved into the era of fiat currencies, money whose value is not backed by a physical asset, but rests solely on trust in the issuing state, its economic power, and the stability of its institutions. It seemed that without gold backing, the dollar should have lost its position, but this is where oil entered the stage. In 1973, the world was shaken by a massive energy crisis. Arab countries in OPEC imposed an embargo on oil supplies to nations that supported Israel in the Yom Kippur War. Energy prices quadrupled, paralyzing Western economies, creating gas station lines and triggering skyrocketing inflation. In this critical situation, the US government executed a brilliant diplomatic maneuver. A strategic agreement was reached with Saudi Arabia, the leader of the oil market. The essence of the deal was crystal clear. Saudi Arabia committed to selling its oil exclusively in US dollars. In exchange, the US guaranteed the kingdom military protection, supplies of advanced weaponry, and political support. Since Saudi Arabia was the largest player, other OPEC nations were forced to adopt the same rules. Thus, the petrodollar system was born. Now, any state wanting to buy oil to run its factories and transport first had to acquire US dollars. The petrodollar system created an artificial but incredibly powerful demand for US currency. Consider any country, such as Japan or India. They need oil. To get it, they must export their goods to the US or other countries to earn dollars or buy them on the foreign exchange market.
This grants the US three fundamental advantages. Exchange rate stability means the massive global demand for dollars maintains their high value, even with large volumes of monetary emission. Cheap borrowing allows the US to borrow money on global markets at extremely low interest rates because the whole world is invested in the stability of dollar assets. Financial weaponization means since almost all dollar transactions pass through the US banking system, the US can freeze accounts and impose sanctions on any country, restricting its access to vital resources. A vital element of the system is so-called recycling. When oil-producing countries receive billions of dollars in profit, they need to invest them somewhere. Instead of just hoarding cash, they return it to the US economy. They buy US Treasury bonds, national debt, invest in real estate in New York or London, purchase shares of tech giants, and buy American weaponry. Thus, the dollars complete a full circle, invariably returning to the US financial system, making it even more resilient. Today, the petrodollar system faces its most serious challenges in 50 years. The BRICS group, including Russia, China, India, and others, openly declares the need for de-dollarization. Russia, under unprecedented sanctions, has shifted a significant portion of its energy settlements to rubles and yuan. China is actively promoting the petro-yuan, aiming to make its currency an alternative settlement tool. Switching to a new currency in the oil trade is not just about changing a price tag. It is a complex process involving long-term contracts, cargo insurance systems, sophisticated risk hedging mechanisms, and banking protocols. The US dollar still possesses unique liquidity. This means you can instantly exchange billions of dollars for any other asset without causing a market crash. No other currency can currently provide the same level of predictability, legal protection, and trading volume. It's comparable to social media. Even if users dislike a platform's policy, they stay because all their counterparties and established connections are there. Nevertheless, we are witnessing an evolution rather than a revolution. China and Russia are systematically reducing their holdings in US treasuries and increasing gold reserves. Using gold as an ultimate asset allows them to bypass dollar restrictions and creates the foundation for a new multipolar financial system. The petrodollar still rules the world, but its monopoly of power is beginning to slowly but surely weaken.